This bear market is hard for Tezos. XTZ, once a rising star, is continuing to collapse, and for good reason. The circulating supply of Tezos continues to increase. Every day 100,000 tokens hit the market, and this is all happening while the bear market is taking its toll. Nobody is using any blockchain. The number of transactions is at low. The average transaction volume is also crippling very close to the x-axis. And the number of Twitter followers, so the social engagement, is even shrinking. And so who's really surprised to see this decline? A decline of more than 90% in the last few months. Measured in Bitcoin, it's even a bit more, 93%. And measured in Ethereum, it's 97%, an even more consistent downwards trend. Since April of 2020, Tezos saw nothing but negative momentum. Now, a lot of altcoins are currently struggling, especially altcoins that continue to expand their supply. But the people that make most money are the ones that buy low and sell high, right? The ones that buy when nobody else wants to buy. But how can this be timed? I personally like to use moving averages. I like to use moving averages that are back tested. So you take a line like this, the turquoise line, and you buy whenever the price is above, and you sell, or you even bet on falling prices when the price is below. But there's all kinds of durations. Do we take the 200-day moving average, or the 100-day, or the 50-day? That's the big question, right? That's why we've got the back tests. So we run a fancy Excel sheet starting with data in 2018, July of 2018. You run a macro, and then with the results of that macro, we can tell what moving averages worked well. For example here, right? The 51-day simple moving average gave us annualized 97% per annum, whereas buying and holding would have given us only 10%. Same data, different display format. So here on the x-axis, we've got the duration of the moving average. On the y-axis, we've got the annualized performance. Buying and holding is the black line. And in turquoise, we've got the simple moving average returns. In red, we've got the exponential moving average returns. And so the best simple moving average is the 51-day. That's what we want to plot on the chart. This is historically what divided the bear and the bull market for Tezos the best. And right now we are very, very close to that moving average. We do have our fake outs. Sometimes we go above, sometimes below, but that's why we run those numbers. Currently, Tezos seems to be bullish, but barely, right? The moving average is currently pretty exactly at 68 cents. So if you want to add this yourself in TradingView, right, you go to tradingview.com, you press /, you enter moving average, you click over here, then you double click on that new line. You can change the styling, maybe here to white and a bit more bold. And then here in inputs, you can change this to 51. And then you press OK, and you get exactly that moving average. So this is how to potentially time this. I like to use moving averages when timing any kind of altcoin. I'm not necessarily sure if I'd buy into Tezos. I stay away simply because of that inflation. I don't like circulating supply increases during bear markets. And I don't like when the social following is shrinking. But maybe you've got fundamental reasons that will turn this all around. If yes, feel free to let us know. There is the comment section down below, so share what you think could turn this all around. Something that most people might not know about. Let me know what altcoin to check out next. Join our Telegram, link is down below.